So basically your objective is this. I'm going to make some room here on our chart. And this is what you need to determine on your own, because I'm sure when all of you came into this room, there was probably a basket of strategies that you were already using. Okay? Don't reinvent the wheel unless you have to. So the first thing you want to ask yourself, is it a trend following strategy? Okay? Is it a trend reversal strategy? Because there are some strategies that look to simply follow the trend. There are other strategies that tend to wait for the trend to reverse. Okay? Is it a momentum strategy? So now we're getting into a sideways market movement strategy, waiting for the next opinion to reveal itself. So is it a momentum strategy? Or finally, and I'll call it exhaustion, sometimes I'll refer to this as inside the range. I'll even call it sometimes a fading or fade strategy, so you know all the different terminology that I might call it. So is it an exhaustion, inside the range, fading, or fade strategy? So what market cycles do trend following and trend reversal fall into? 12 to 2 or 4 to 6, right? I'm either following the trend or I'm waiting for the trend to possibly reverse. Okay? Momentum is what? 3 o'clock, right? And then finally, exhaustion, inside the range, or fading, that's distribution, 2 to 4 o'clock. And again, that's the cycle that is easier to recognize by what it's not. When you don't have 12 to 2, 4 to 6, or flat 3, you have distribution, most likely. Okay? All right, so by the way, if you cannot determine what the clock angle is, move on. Sounds simple. Don't force a reading on a time frame or a pair. How many pairs are there? Plenty. How many time frames do we talk about? 5? So let's say you did nothing but trade dollar correlated majors. The euro US dollar, the US dollar Japanese yen, the British pound US dollar, and let's even throw in the dollar Swissy in there. 4 pairs, 5 time frames. That's 20 charts. Okay? So what we could do then is go ahead at this point and say, well, if I can't take a clock angle reading on a particular time frame of a pair, go to another time frame. Go to another pair. Okay? There's not always going to be a clear reading. Okay? That's something I think I should mention. There'll be times when the market cycle might be in some sort of state of flux. We don't really know what's happening yet. Okay? If you can't clearly say 12 to 2, 4 to 6, 3, or 2 to 4, look at another time frame. Okay? Look at another time frame. Don't force any of this analysis. So you need 4, in my opinion, what I have is I have 4 different entry strategies. By the way, if I wanted to break this down into chart patterns, what would they be? Trend following, I could look for channels and wedges. Trend reversal, same thing. A trend following with a channel or wedges, the pattern continues to move lower as prices trade within it. Okay? A trend reversal means the prices have broken out through the boundaries of the pattern. With momentum, rectangles, triangles, pennants, triple top, triple bottom, double top, double bottom. The exhaustion inside the range or fading will basically be the same patterns that I would look at for momentum, but my preference is for patterns that have a horizontal level, and we'll look for exhaustion at those key high and lows, high or lows really. So momentum and exhaustion look at those same sideways patterns, just as trend following and trend reversal look at the same trending strategies or trend patterns. But the difference is what our reaction is at support or at resistance. Okay? Again, what does that mean? If I'm looking at a rectangle pattern and the market cycle is a 3 o'clock flat accumulation cycle, momentum basically says when prices pierce the Support or resistance, I'm going to look for follow-through, higher or lower. I'm looking for momentum, right? Exhaustion, if the market cycle is 2 to 4, okay? If the market cycle is 2 to 4, what am I looking at then? Then what I'm going to go ahead and do is look for prices to basically get to that support or get to that resistance level and then come back to within the pattern. Does that make sense? So it's the same pattern, it's the same decision levels, but it's what we decide to do at those levels. And what we decide to do is determined by the underlying market cycle. Does everyone follow me there? Because that's at the heart of what we've been talking about. So let's go ahead and scan through the charts here. And this is why I kind of like to open up the floor, because I like to use current price action. Everything we've done here today actually talked about mostly today's price action. Okay? So basically, if there's a pattern, if there's a pair or a time frame that you're looking at right now, let's go ahead and do some live analysis. Proof's in the pudding, right? So I try to shy away from the well-chosen example for these presentations. I'd rather use the current market. So I thought the Euro-US dollar was a good example because just the dramatic moves. And by the way, if I'm looking at the Euro-US dollar, okay, and I'm looking at the angle of the wave here, and I want to look across multiple time frames. So I wanted to start off with, let's say, the 15-minute chart, 3 to 5 day look back, which I'm almost within here. So here's a 3 to 5 day look back on the 15-minute chart. What's my angle of the wave? It's heading down at 4 to 6, is it not? So if it's heading down at 4 to 6, I'm looking for a trending strategy, okay? And if I'm looking for a trending strategy, my first inclination, anytime the market is trending, is not to pick bottoms, which I think is just an absolute no-no. I'm actually, or tops for that matter, I'm actually looking for the trend to continue. Physics 101, right? Something in motion tends to stay in motion. I'm looking for the continuation. So my personal approach is, if I have a trending market, I would like to wait for the trend to correct. In a downtrend, that means a bounce. And then I'll look for prices to exhaust and head back down again. Basically, I'll swing trade, right? So if I'm looking for a swing trading setup, a swing trading opportunity on this particular chart, I could use a chart pattern like a falling wedge or a channel down, or I could use the resistance of the wave itself. The 34 EMA low here would be a swing short trigger for me. What else could we use? What are other tools? I talked about Fibonacci. I talked about psychological levels. I could pull a Fibonacci study from the last major move on this chart, and I could look for the opportunity to short. And let me get to the low here. There we go. And the opportunity to short, based upon the Fibonacci of the last major move, which was actually a sell-off. Okay, I'm just screwing that up, aren't I? Let's draw it again one more time. There's my high, there's my low. Okay, so the opportunity to short would basically come from that move right there. There we go. And it looks like, I'm going to widen this view a little bit here, because I don't think I'm hitting the lows quite right. Yeah, it wasn't. There we go. Okay, now I have the high to the low. So notice, I'm out of market memory right now just so I could see the highs and lows. If you want to squeeze the market memory back in, that's fine, and probably be a smart thing to do. So if the angle is heading down and Fibonacci is showing me a correction on this 15-minute chart, sorry for all the jumping here. There we go. So where might I exhaust? At the bottom line of the wave, the 34 period EMA low, or maybe at this 23.6 perhaps. Usually I find the 23.6 to be a little shallow, but since I am getting a zone of what could be resistance between the 23.6 Fibo and the 34 EMA low, I'm getting a little zone here. I could look for this to be the swing, this to be the bounce or correction, and I could look for a short into that to look for a continuation lower. So again, this is my swing, and the swing is occurring in an overall downtrend as determined by the angle of the wave within the look back. Yes? Everybody with me? So this is what I'm talking about right in here. Okay?